This is Robert Harper with Virginia Farm Bureau's Grain Division. Glad to bring you the Merchandiser Minute for Friday, March 20th, 2020. And happy first day of spring to each of you. It's been exciting this week listening to those of you who have been spreading a lot of fertilizer, burning down a lot of corn land, and even several of you who've started planting corn. I'm glad you're focused on those things and you're getting a lot done this week. From a price perspective, we all know it's been quite a week with much volatility. The currency markets, the equity markets, the energy markets, the commodity markets, all across all boards in New York and in Chicago, we've seen volatility in some cases like we've never seen before. It's made it very difficult not only for the speculator but for the investor as well as the producer to understand what to do. It was definitely a week where outside markets, especially currencies, energies, and equities, dictated what the futures that we care so much about, corn, wheat, and soybeans, what they were doing. Outside markets were definitely dictating what the futures that we care about were doing this week. There's so many question marks in the trade, probably more than we've seen in a long time. We know when question marks get into trade, it stirs up fear. Fear stirs up panic, and panic makes speculators and investors sell. And that was really the 2 + 2 that equals 4 that happened this week. We're going to see a lot more of that going forward. We got a lot of news this week of new monetary policy from governments all across the globe, whether it was quantitative easing, whether it was low interest rate loans, grants, interest rate reductions. It was coming so hard and so fast every day this week that too helped the outside markets stay volatile, and we're going to need to pay attention to that next week. We saw May corn this week close down 19 cents a bushel to $3.43 from the open on Sunday night. May soybeans were up 20 cents a bushel, and yes, I did say that, and y'all know it. We were up 20 cents a bushel in beans this week to close at $8.62. And also on the positive side, May wheat in Chicago was up 36 cents a bushel this week to close at $5.39, and we'll talk a little bit about that. But the story for corn this week is directly tied to the energy markets. We've seen this price war between Saudi Arabia and Russia in terms of crude oil and how that's translated in a complicated way to natural gas, to ethanol, to gasoline futures as well. We saw ethanol futures this week to fall to their lowest level in recorded history, depending on what contract you were looking at, about $1 a gallon on the futures board. We did see gasoline futures, I think it was a 15-year low when they hit 70 cents a gallon. We know that ethanol is not supposed to be more expensive than gasoline, and we saw many ethanol plants in the Corn Belt go no bid on buying corn, and even some shuttered their gates and are going offline for a while. The speculators certainly saw this as a lack of demand for corn, and that put extreme pressure on the corn futures that ended up taking out last year's harvest low. So it was all about ethanol this week for corn. We also saw some positivity this week, as I said earlier, in beans and in wheat. We saw today flash sales announcements. We've been waiting for these for a long time. Remember, if a commercial here in the United States sells a contract over 100,000 metric tons, they have to report that contract that day. They don't have to wait. It isn't the USDA doesn't wait for the weekly export sales report on Thursday to report it. So today we saw a big soybean purchase from an unknown, which we know we generally take that as China. We also saw China with some flash sales announcements today for wheat as well as for corn. And in our weekly export report yesterday, China bought a lot of sorghum, and that helped offset some of the headwinds that corn faces with this ethanol situation, the amount of sorghum that China has been buying from the United States. They also bought a fair amount of pork this week from us and cotton. So we know they're on the clock for those $40 billion of ag purchases by the end of the year. And believe me, if we're going to face these headwinds with corn in the ethanol market, we're going to need China to really pick up and buy a lot of corn from us to keep our ending stocks for corn from going too higher. Next week is going to be about watching soybean meal. We saw a big rally in soybean meal this week, the last 2 days, which has made soybean futures go up. Now, remember, Argentina is the world's largest #1 soybean meal exporter, and there was rumors that they were going to be closing some of their ports due to the virus. That means the world's business will have to come to the United States. Soybean meal rallied hard. You got a 17-cent gain yesterday in soybean futures, as well as a 19-cent gain today to make up for these losses. A big reversal week for beans. So watch soybean meal. And also remember, we've had a lot going on in the feeder cattle and the live cattle markets. Limit down moves, limit up moves. We've seen grocery store shelves empty. And remember, there is no shortage of anything that's in the grocery store, and praise God for that, and praise you all for your hard work and the supply chain people. Remember, I'm rough on these numbers, but 5 or 6 years ago, the average American now spends more of their food money eating outside of the home than they do inside of the home. Some of what you've seen cleaning out the grocery stores in your neighborhood is hoarding, but the majority of it is people are now eating at home, and they all went to the grocery store and cleaned the shelves. So we've seen this huge demand spike, especially for beef, and it's really thrown a monkey wrench into how the futures trade. And some of you are cattle producers, if you're not, talk to some who are and get some information on that. Texas is 30% planted on their corn crop. We saw a lot of option volatility this week. Give us a call if we can talk to you about re-owning some of your cash sales with options. And again, next week is going to all be about the virus and how it is spreading. We're going to look for more monetary policy and programs coming out from central banks around the world and governments around the world dealing with this virus. And just ending here today, remember, all we can do is control what we can control. Focus on all the good work that y'all are really good at doing and that y'all enjoy doing in the coming week. Give us a call if we can help you. This is Robert Harper at Farm Bureau's Grain Division.